If you're a CPA or financial advisor, what's the one thing about your clients' mortgages that you probably aren't paying enough attention to?
Yeah, the mortgage is usually the largest financial decision your client will ever make. And in most cases, it's completely siloed from the rest of their financial plan. The CPA optimizes for income and tax write offs. The financial advisor manages their investments, but nobody's managing the mortgage as a wealth tool. And the gap is costing your clients money.
Jeff, you work with a lot of high net worth and complex income clients. How often are there CPAs or financial advisors part of that conversation?
Yeah, rarely, and that's the problem. I'll sit down with a client, a business owner, successful professional, solid portfolio, and I'll ask them, does your CPA know about this purchase? Does your financial advisor know how you're structuring this? Most of the time, the answer is no. And these conversations happen in separate rooms. And the result is that decisions get made without that full financial picture. Tax implications of the mortgage structure, nobody talked about that. The opportunity cost of down payment versus portfolio allocation, didn't come up with it. Whether it's a cash out refinance serves the client better than a HELOC for their investment goals, the lender made that call alone. The clients who come to me with their CPAs and their financial advisors already looped in, they make better decisions, faster and with less stress.
Let me push back a little. Most CPAs would say, I focus on taxes. The client picks their own lender. That's not my domain.
Yeah, that's the conventional thinking. And I'd argue it's exactly where significant client value gets left on the table. Here's a simple example. A business owner client wants to buy a $1.2 million home. They're planning to put 20% down or $240,000, pulled from their business account. Nobody asked, what's the tax impact of pulling that cash? What does the business lose by not having that liquidity? Would a different loan structure with less down payment preserve capital that generates a higher return? That's not purely a tax question. It's not purely a lending question. It sits exactly in the intersection between the CPA world and the lender's world. The advisor who can facilitate that conversation, even by just connecting the right professionals, creates enormous value for their client.
What does it actually look like in practice when a CPA or FA is looped into the mortgage conversation? What changes?
Yeah, a few things. First, the loan structure conversation gets more sophisticated. We talk about mortgage interest deductibility in the context of the client's overall tax picture. We talk about whether a larger mortgage with more preserved capital might actually be a better move. Second, timing decisions get made more intentionally. Should this client close before December 31st for tax purposes? Should they pay down debt before applying to optimize their debt to income ratio? Should they move investments to create a clean paper trail for assets? These are questions the CPA and lender should answer together. Third, and this is most important, complex income gets handled correctly. Self-employed clients, business owners, K-1 income, partnership distribution, the way income gets documented for mortgage qualifications is very specific. And if the CPA isn't aware of how lenders read tax returns, the client might structure their income in a way that helps their taxes, but can really hurt their mortgage application.
Can you give me a real example of when this integrated approach made a meaningful difference for a client?
Yes, I had a client referred to me by her CPA. A physician, owns her practice, earns well, but her tax returns look complicated. Multiple entities, depreciation deductions, the works. She'd been turned down by 2 conventional lenders. They looked at her returns, saw the complexity, and said the income wasn't high enough to qualify. I got a call with her CPA. He walked me through exactly how her income flowed between the entities, what the actual economic income was versus the tax return showed. We identified the right documentation approach, a combination of business bank statements and a CPA prepared income analysis. She closed on a $1.4 million purchase. The same tax returns that got her denied elsewhere supported a fully documented loan when the CPA and I were on the same page. That CPA now refers every client who's buying a refinance to me first. We've probably done 15 transactions together since then.
For FAS specifically, how does the mortgage fit into wealth management? Is there a strategic lens that most advisors aren't using?
Absolutely. And it comes down to one concept: debt is a wealth tool. Most people, including some financial advisors, have a reflexive reaction that debt is bad. Pay it off, get rid of it. But sophisticated wealth builders often think about debt very differently. A 30-year fixed rate mortgage at a tax deductible rate, with the alternative being fully paid off home with no return on that capital, that's a real opportunity cost conversation. Cash out refinancing to fund investment properties with better returns than the mortgage, that's a leverage conversation. The mortgage isn't separate from the investment portfolio, and for a lot of clients, it's connected to it directly. Financial advisors who understand that integration serve their clients at a level most advisors don't.
For CPAs and FAs watching this, what's the practical first step?
It's one conversation. The next time a client mentions they're buying a home, refinancing, or thinking about real estate investment, ask them, do you have a lender you trust? Have you thought about how this fits in with your overall financial picture? And if the answer is no or uncertain, introduce them to someone who approaches mortgage strategy the way you approach your work, with a plan, not just a rate. And if you want to be that resource for your clients, reach out to me. I'm happy to be the lender in your network who thinks this way. If this conversation resonated, let's connect. I work with CPAs and financial advisors who want to offer their clients a complete financial picture. You can text me at 720-699-9587 or reach out at teamaronheim@ccm.com. The conversation takes 20 minutes, but the value to your clients can be significant.